Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. So first off, thanks to those of you that stuck around yesterday for our options session. It was the first one in a few weeks, so there was a lot to catch up on. We definitely spent quite a bit of time talking about what to watch for this week because you do have a couple bigger economic events on the radar. With Powell's speech on Wednesday, PCE Thursday, jobs report Friday, and then obviously a little bit later in December, just a huge 48-hour stretch with the CPI and the FOMC rate decision on back-to-back days. So if you weren't able to make it, definitely check that out. And if you have any questions, let me know. So last week was a short holiday week, a little bit quieter volume, but kind of under the radar. Interesting development for option traders. The Qs and the SPY introduced daily expiration. So they've had for a little while Monday, Wednesday, Friday expiration, and just last week Tuesday and Thursday were also introduced. So now you have 5 days a week expiration: Monday, Tuesday, Wednesday, Thursday, Friday. What's amazing is that the volume is just off the charts on these really short, like 0 days to expiration contracts. Um, I will say that just like with any really short-term contracts, you have to be careful because especially if you're trading contracts that expire that afternoon. I mean, one wrong move and the premiums are going to get wiped out very quickly. But it does make for some interesting opportunities around events because with earnings season and especially in December with some of these big economic events, it's nice to know exactly how much is priced in, right? So if the CPI is on a Tuesday, before the only options were a Wednesday expiration, so you had to pay for two trading sessions. Now you can get Tuesday expiration, so you could literally just pay the pricing for like that one day, that one event, and that removes some of the premium, right, and makes you able to get some contracts cheaper, and that could kind of like increase like the risk to reward parameters a little bit. Also, what I'm really interested in is these dailies. So like these these really short-term options around earnings season, especially when like the big players are reporting, like the Metas and the Microsofts and the Apples and the Googles, right? Because these names, I mean, minus Apple, which reports at 4:30. These stocks tend to report earnings like right after the market closes, and the SPY and the Q options don't close until 4:15. So oftentimes you'll see on the weeks or like the days when those names report and numbers come out at 4:05, the SPY, the Qs could have really significant moves in a few minutes, and the window between 4 and 4:15 before options close, especially on like those daily expiration contracts, there could be some real serious opportunity there. So I'm particularly excited for that, but I'm also excited because now with these economic events taking on even greater importance, there could be some opportunities with these really short-term options on these events. So things to kind of keep in mind now, especially as you start to like maybe price out some strangles, straddles, etc., going into either the jobs report or the CPI and FOMC later this month or later in December, excuse me, is that now we have these really short-term contracts, and there's definitely cons, but there's also pros. And I find it interesting, especially now that the volume is just massive and the bid-ask spreads are relatively tight. So you're not paying like a really wide spread on those either. So just more things to consider now, right? Just more options, on options actually. So I thought it was an interesting development last week. All right. So if you like this video and you're looking for more information about trading options or swing trading with options, please follow up with the link in the description of the video for more information on options to play. Have a great night. Stay well. I'll talk to you